Imagine a world where China owns all of our infrastructure. Does it seem far-fetched? Well, today we're going to dive into China's bold pitch to President Trump, drop those pesky U.S. tariffs, and we're going to flood America with investments. But I'm going to show you why. It's a trap because China pushes Trump to drop curbs as it dangles investment pledge. Now, we know this is exactly what President Trump wants. He wants foreign companies, foreign countries to invest in the United States. And he wants to see money coming back because what he sees is dollars leaving the country and not coming back because it's taking American jobs with it. Now, the key issue here, it would bring the tariff level down for China because they'd be building factories in America, and that would employ Americans, and that would be a huge win for the Trump administration. But there's some problems. The demand from President Xi Jinping's negotiators also include lowering tariffs on imported inputs. This is a key point from the world's #2 economy used by any Chinese factories built in the U.S. as a result. Now think of this. So they build a factory here to say build automobiles, but they wouldn't be using U.S. steel. They would be using Chinese steel, not to mention bricks, cement, and even more. It would all come from China. So yes, we'd have a factory here, but all the inputs, they'd be Chinese. And what would this do to a lot of local suppliers? It would put them right out of business. But it wouldn't stop there. They would be importing heavy machinery. And on the production side, how about rare earths, chemicals, batteries, electronics, you name it, it would all come from China. And we already know the quality of some of their products and inputs are poor. But there's something you didn't know. They also import workers to build these factories, and that's a major problem here because, again, this whole notion of these tariffs was to put Americans back to work, build production here. But China's move, well, it would undermine that. What it would do is create a dumping ground for their inputs right here in the U.S. and put millions of Americans right on the unemployment line. And the Chinese floated a figure of $1 trillion. Now keep in mind, this is the biggest number that any country's offered, and that's a huge carrot. And President Xi urged President Trump in a phone call to create conditions for, quote, Chinese enterprises to invest in America. And now, I don't know about you, but it doesn't sound like they'd be investing in America. It sounds like they'd be buying America, and that's a major problem here because they're using this trade war to try to convince President Trump and the American people that China investing in this country is a good thing when they don't realize China's been doing this all over the world, and the problem is it never works out for the host country. The Chinese proposals are part of a bold set of requests that include pressing the U.S. to change its decades-old stance on Taiwan, another red line for Washington, and one we know is likely not going to happen. They also represent a shift from trade talks during Trump's first term that focused on purchase of U.S. exports, specifically farm goods. We're talking soybeans and corn and other things that U.S. farmers have a lot of excess production of and would love to export to China. Right now, China's largely cutting us off. The problem is this deal would not include U.S. farmers. Again, that could be a deal breaker right there. And Matt Pottinger of China Hawk, who first served as Deputy National Security Advisor during Trump's first term, he said, quote, it would be a tantamount to the U.S. becoming part of the Belt and Road Initiative, indeed its final destination. Now let me explain how dangerous this Belt and Road Initiative is, because here's how it works. China comes into a country and says, look, we're going to build some infrastructure for you. We're even going to give you the money to do it. And we're going to put in maybe a shipping port or a railway or a factory or something you really need, but you don't have the funds to do it. And of course, the country is saying, hey, that's great news. We would love that. The problem is the host country doesn't realize it comes with a lot of terms. Number one, China sends their own workers to build it, their own machinery, and their own inputs. Of course, this would not be good for Americans at all. Then they turn around and structure it as a loan. And the default rate on these loans, it's about 80%. And for good reason, because in the contracts, China has it written that if you default, we take the project back. So what they're doing is they're coming in using Chinese workers, Chinese inputs, building something, lending the money out to the other country, knowing they're going to default, and then they're taking it back. So you can see this is China's way to buy America. I want to give you a quick update on that trade on SMH that I showed you yesterday. Let's check this out. It's now up 13.8%. Again, we make trading so easy for our subscribers because they don't have to sit in front of their computer all day. We give them risk control levels. In fact, yesterday we updated it. In fact, I have a major announcement coming soon. Right now, I'm integrating our CTA Timer Pro into the optimization engine, and it's unlike any other strategy. It blows the doors off of everything. Now, you need to get on this program before the price price goes up. If you've been waiting, time's running out. Grab those links in the description below. Use a coupon code for your free 30-day trial, because the new Metre strategy with the CTA integration is going to change things once again. Stay tuned to the end of the show for more information. But securing greater access to the world's biggest consumer market would be a blessing for China, where companies are struggling with weak domestic demand and cutting prices and jobs. And you bet this would be a huge win for China right now, because their economy is continuing to slow. And based on what we're seeing in China, the global economy is slowing, indicating that they're heading into a recession before anyone else. Of course, the problem is their banking industry has lent massive amounts of money into the factory sector, into the housing market, and if their economy goes, you could be facing a whole financial crisis centered right around the Chinese banks. Now, this would be a short-term boost for the U.S. because China would come in and say, hey, we're going to build some factories. And yes, there would be Americans at some level that would get employed. This would be good. But in the end of the day, it would put massive pressure on American manufacturers. They'd hate it because China would come in and undercut them with substandard products built with substandard inputs. You know it would be a complete disaster. And yet the America First investment policy, according to President Donald Trump, said investment at all costs is not always in national interest. That's a very good point. That memo accused China of using investment in the U.S. to, quote, obtain cutting-edge technologies, intellectual property, and leverage in strategic industries. And while that may be part of the plan, I think the real plan is, look, we're going to come in and build a bunch of stuff for you, and then we're going to loan you the money so you can actually buy it. And when you default, we're going to take it back. And what you can find out real quick is China's going to start owning our infrastructure if they do this deal, and it's not in our best interest. But you can see the motivation behind China's move here. Again, it's all back to their economy. As China factory activity improves, but the slump has now reached its 6 months. And again, it's continuing its downward trend. Now, the road is bumpy here. It's not just accelerating to the downside, but you're seeing their factory sector continue to contract. Let's take a look, because the official manufacturing PMI was at 49.8. Again, under 50 denotes a contraction. How about we turn to the services side? This is a measure of activity in construction and services. Now fell more than forecast to 50. That's unchanged. That's stall speed. That's stagnation. Remember, where manufacturing goes, services follows. We're seeing that even here in the U.S. Now, it's the first evidence that the weakness in the economy persisted through the end of the third quarter after its two worst months of this year in July and August. So again, we saw a little bit of a turnaround here, but not much. Hurting the outlook for Chinese factories of subdued domestic demand, while uncertainty around U.S. tariffs creates risk for exporters, and this would be a boom for Chinese exporters. You're thinking labor, inputs, machinery, you name it, they're going to send it all over here to build these factories, and that's why China really needs this deal, and they need it right now, because it would keep them out of recession and likely push us right into one. Another constraint on the economy is the real estate market, still in distress after a crisis started back in 2021. China's home sales extended their slump in August, even as the country's two biggest cities rolled out additional stimulus measures. And I've been making the case now for years that all this stimulus China's doing isn't going to work. But if they could start building factories here in the U.S., guess what it would lead to? A lot more Chinese jobs. They could certainly afford those homes. It would turn around their real estate market immediately. The property market shows no signs of recovery, and right now, neither does the global economy. And this from Raymond Yung. He's a chief economist for Greater China at Australia and New Zealand Banking Group. He notes that this is different from the situation in 2019 and 2020. That's because the U.S. economy was turning around and driving a lot of domestic and global demand. The market expectation has changed, and the slowdown is more structural than cyclical, when now you can see why. This is a bad deal for the U.S. The global economy's already headed the wrong direction, but I wanted you to see that this was a trap. I hope we don't fall into it, because right now what it suggests is China's looking for a way to save their economy and start buying up the U.S., and now you know exactly how they're planning to do it. Now, right now, I'm changing the game when it comes to trading, and you can get in on this, because what we're doing is we're taking all of these strategies out on the market, we're optimizing them on a per security basis, and then identifying their strengths and weaknesses and creating an ultimate meta strategy. Let's take a look at what an optimized strategy looks like. This is from our meta strategy. It's not the enhanced version that we're running now that's even better, and not the one that's coming soon with the CTA integration. Check this 2-year backtest on the SPY. Total return 71%, beating buy and hold. Win rate over 66% with 69 trades. Max drawdown right around 7.5%. Now let me show you this against an unoptimized strategy. This run by my buddy Jay Bravo. He says, look, one size fits all, but the reality is he also will tell you that you have to use a lot of other signals with this. You've got to sit in front of your computer all day to trade, but not with mine. And look at the difference. Total return 51%, missing buy and hold. Win rate 51% with half the number of trades and the same drawdown. Now, let's talk about how you get the meta strategy in all of these trades. You got to sign up for one of my reports. Now, our best report, that's our CTA Timer Pro. We trade against machine positioning, and we're making some major upgrades to this that's going to, again, put more money in your pocket when it comes to trading. But maybe you don't want to trade against machine positioning. Well, we have a Momentum Timer Pro. We look at those tactical indicators and the trend. We pair those all together, and then again, it's called our Momentum Timer Pro report. But what we've done is we've combined right now 10 professional trading strategies into a single intelligent signal generator, generating a massive number of signals. And again, we have multi-strategy consensus, but what I've done is I've optimized it for swing trading with the highest potential 10-day forward-looking returns. Nobody else has done this. Again, we show you how to get in, get out, and put money right in your pocket. Now, again, you've got to sign up for one of those reports, and of course, you get all of the signals from those reports on top of those meta strategy trades. You get my opinion on the best trades. We give you risk control levels, full tracking of all our open trades in return, a weekly update, and here's the best part. Whether you're brand new to trading or whether you're buying other subscriptions, you can compare us for 30 days, and you're going to see at the end, we stand as the best. How do you do that? Grab those links in the description below and use a coupon code for your free 30-day trial. With that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.